Hey, what's up, everybody? Drew, aka Catching Rockets here. Um, well, I need to get closer to my mic, I think. Okay. Um, so we'll quickly go over option plays for Monday, and then after that, we'll go over some volume profile stuff. Well, my beard's looking crazy. Um, and sorry, I'm running a little bit late, like 10 minutes. Yeah, my as soon as I scheduled the live stream, um, I went downstairs to grab something, and my wife's like, "Hey, can you feed the baby, change her, and burp her?" And I'm like, okay." So that's why I'm running late. Anyway, let's get into it. Um, Actually, so quickly we'll cover our trades for last Thursday. Most of them, well, we just had three trades for Thursday, um, and most of them were invalidated. They didn't reach our, or they opened above our trigger. So Netflix really did exactly what I thought it was going to do. When I give levels, I'm not, like I figured Netflix was going to clear this high here at 632.04 ish, whatever, this candle. But I had planned on taking calls over 613. We opened wherever up at 620.35 ish. So we opened above all of my levels, came down, hit the first trim, and then bounced. So this is invalid. Um, Worked out, but still invalid. Next one is Pan W, which basically did the same thing. Opened above our levels. I was expecting, again, this high here. I was expecting price to go above that 314.70 ish, give or take. But when I give plays, like I want you guys in and out before we get, to the top kind of thing. I don't want to um, have it reject, before we get to where I think it's going. So anyway, um, we opened above all of the levels, pulled back to the first trim, and then bounced pretty hard. Didn't make it to our calls above level. So that one's invalid as well. The last one is going to be Upstart, which actually played out twice. Um, the original play. So this was for Thursday, not Monday here or whatever this is, Wednesday. So on Thursday, we opened, pulled back, came up, and hit our first trim, and then we just kind of chopped sideways for the rest of the day. Um, Friday, we opened, pulled back, went back over our calls over level, and went up and hit the 36 level that we were targeting. So it worked out twice. Um, for Monday, first one is going to be AMAT. On these, I have like quite a bit of levels, but um, so I'm looking for puts under 190 and 50 cents. First trim will be 189 and 40 cents. I really hate to do like these trades where the first trim is just like a dollar move or whatever. I generally look for more. But the thing is once we break under like 87, 80 ish, things really start to open up and we should start moving much quicker on this. Um, anyway, second trim 188.29, third trim 186.85, fourth trim 185, and close at 183.55. I would expect us to come down to about 182, but again, I want to be out before we get a strong bounce. This is going to be a swing trade 2 days out. Next one that I'm looking at is going to be Crowd. Looking for puts on Crowd under 239.75. We'll take puts. Same thing. I hate to have like a $1 move, but really there's a potential of a bounce here. So first trim is going to be 238 and 80 cents. Kind of the same thing. Once we lose like 238.33 ish, we start to move a lot quicker. Second trim will be 237 and 50 cents. Third trim 235.80. Fourth trim 234.57, and then we'll close at 233.03. This is also going to be a swing trade 2 days out. And then the last one that I have for you guys is going to be Morgan Stanley. This is more appropriate for people with smaller account sizes. Sorry, let me pull up. Where is it? I was looking at the actual strikes on this. I feel like I missed. I feel like I had a fourth trade and I didn't include it on my spreadsheet. Oh well. Can't really do anything about it. If I happen to see it, I'll let you guys know. But on this, like, I was looking at it, like the $92.50 strike price. Spreads are good, and the open interest is 1,671. So that's probably the one that you want to take, because when we get down to here, we'll be close to in the money. And you should be able to make some decent money. And that's for August 16th, the expiration on that put that I'm looking at. There is a chance, that we come down to 250, but I'm looking to get out at, that we come down to 92.50. I'm looking to get out at 92.82. So puts below 94.35, first trim 93.44, and then close at 92.82. Okay. So those are the only trades that I have for Monday. And then we'll just dive into more of a class. I'm going to chart SPY live. I'm going to go, last time we went over SPY, we charted it live together, and I talked about volume profile, talked about SIGs, talked about TPOs. But I didn't really go into depth in any one of those. Today we're just going to go more in depth on volume profile, and we'll chart SPY live together. Okay. What's up, Little Mind? What's up, Kendra? No problem. My pleasure. No problem, Lisa. How you doing? What's up, college? All right. So let's move over to, and then I didn't mention, on MS, this is just going to be a day trade in and out. This is a quickie that I basically included for people with smaller accounts. All right, SPY. First things first, we're going to erase everything on this chart. And we'll just start with a clean chart. So some things that we covered on the last live, I think it was Wednesday, will be similar to what I'm going to cover right now, but we'll go more in depth on volume profile. So let me just start here. You'll go to indicators. You're going to go to session volume profile, or just type in SVP. Session volume profile will come up. You can put stars next to these. Do not use session volume profile HD. People think HD would be better, higher definition. It is not. Your levels will be all kinds of funky. So we're just looking for the standard session volume profile. You can put a star next to it if you want to. That way it shows up in your favorites. And then once you have it on your chart, you're going to go into the settings. We're looking for value area volume 68, row size 100. And then while it's on my mind and I'm thinking of it, the people that were having issues with different levels to me last live is because you don't have live data. You have to pay for live data. In trading, there's certain things that, are expenses that you're going to have. You can't be cheap on. You have to have live data for TradingView. You're going to need a paid account to get the some of the indicators Like if you want TPO, you have to have the most expensive package, which is always best to buy like Black Friday or whatever. They always have deals. Um, but there's just certain things as a trader that you can't be cheap about, and you're going to have to pay for. And live data on TradingView is one of them. At least if you want to do volume profile, which really is the way to trade. So value area volume 68, row size 100. Under style, you want to check value area high, value area low, POC. And then that's going to be it for our settings. But for right now, we're going to be using a different indicator on the 1-day chart, which is called PVP, which is periodic volume profile. So add that to your chart, and you're going to go into the settings. For right now on the 1-day chart, we're going to be using 12-month period, and the value area volume will be 68, row size will be 100. Under style, check value area high, value area low, and POC. And then once you have that, the main thing we're interested in is going to be our value area low, value area high, and our POC. And sorry, can't really talk and do this at the same time. Kind of a noob like that. Generally, we're only going to be interested in the year prior, previous year, previous month, previous week, previous day. Sorry. And right now, 2023 doesn't really matter other than the fact that we have a VPOC at the bottom. But we're pretty far out of the range right now. Excuse my dogs. There's gardeners outside. From here, actually, while it's on my mind, I'm going to cover this. The difference between a VPOC and a regular POC. Or actually, we'll just cover POCs in general. POC is going to be the point of control. The point of control is the area on any given time period where the most volume was traded. So you can see like here we have a lot of candles through here, and then a lot of chopping candles through here, and then we come back down and touch it and then go. So because of all of the volume that was traded through here and then here, it created a nice volume shelf, which gives us our POC for this price range, or for this time range, I should say. So point of control is going to be the largest amount of volume on a given time frame, or period of time, I should say. And then it's volume at price, right? Well, I'll dive into this. I think I'm getting ahead of myself, so I'm going to go backwards. But anyway, our the distinction between a POC and a VPOC is, as our POC is being formed, like this here, price can touch it a bunch of times, touch this level, and it's fine. But once we leave, in this case, we're leaving 2023, which happened here. Once we leave 2023, if price comes down and touches this, this becomes a POC. But until price comes down and touches it, or comes up and touches it, depending on, if price is above or below, this remains a VPOC, which stands for Virgin Point of Control. Once price touches it after it's been formed, it would just turn into a regular POC. Virgin POCs are about 10 times stronger than regular POCs, meaning that they will pull price to them. So like if you have 2 Virgin POCs to the upside and 6 to the downside, you kind of expect price to be pulled down. So that's the distinction between a POC and a Virgin POC. I'm going to take a sip of something here because my throat is bothering me. And then we're going to explain volume profile a little bit better. Okay. So, sorry about my dogs. That's annoying. Let's just go to 30 minutes. Let's turn off PvP and we'll turn on our session volume profile. So, session volume profile is going to give us basically volume profile on each day. So, like, this here is going to be Monday. This is Tuesday, Wednesday, Thursday, Friday. So, down at the bottom, we have volume based on time, right? So, this is volume candles based on the time of the day. Volume profile is going to be volume based on price, right? So we're basically taking this and turning it sideways, and it's showing us where volume is being traded based on price versus based on time, okay? And when you're looking at volume profile, um, there's a few things that you want to look for. One is going to be the shape of the day. One is going to be where volume shelves are being formed. And so we'll use Thursday as an example. This is going to be a P shape. It's a capital P, right? So this is our P here, right? This Friday was a D. Wednesday is a lowercase b. And this, or I'm sorry, I guess this is Tuesday. This is looking like a D as well, right? And then this is definitely a D. Whoops. So D shapes are generally like our typical days where price just kind of stays in the same range. Um, Let me remove these drawings so we can actually see candles. This day is kind of an extended typical day where price kept pushing higher and higher and higher. But due to the way that it went, like it created a D profile because we spent more time at the bottom at the beginning of the day, and towards the end of the day, we spent more time at the top. But we're basically trading, between 530.50 and 533. Price was happy in this range, right? A P shape is going to be your days where it's more of a trend day where you're from the open, you kind of rip up, and then at the end of the day, you kind of chop towards the top. Lowercase b is going to be the inverse of the P, where we sell off and then kind of chop sideways at the bottom. This, you could even argue that this might be a capital B, like this. I don't think it is because we don't have enough volume up here compared to down here, but it's close. And then another D here, which I've already explained, which is our typical day where price kind of stays in the same range all day. The only one that I'm not really seeing on here is going to be our B shape. There are other shapes, but these are the primary ones that you're going to watch for. A B shape is just going to be a double distribution day. So it's where we have our B, right? And basically like price is being traded here and then it rips up and then price is traded up here. And you have like basically two pretty equal volume shelves to give you a capital B, Okay, hopefully that makes sense. Now we'll get more into like the meat of things. Basically, what this means for us as traders is, you always see people talking about supply and demand. I don't like to draw big boxes for supply and demand on my charts, but I just use my volume profile lines, and those are generally good enough. But if you look at the volume profile, where we have these larger shelves is going to be like your supply and demand, right? And where you have less volume traded, as you can see on this candle here, price can pass through here very quickly. And so the way that you think about this, so like from here to here, price went very quickly up. And then when we lost this, price moved very quickly back down. And then price went very quickly to the other side, and then we ended up trading higher. Um, and so the way that you want to think about these large volume shelves is like stairs on steps or like rungs on a ladder, where, like we as people, if we're walking or, going upstairs or going up a ladder, like when we're on the stair, we can stand there and we're not going to fall. But when we go from one step to the next, we can't stand here because we're going to fall down to here, right? So we have to go quickly from this step to the next step. And then once we're on this step, we can stand there. If we go back below the step, we're going to quickly fall back down. If we go back above the step, we're going to go quickly back up, right? So these are they're what is called skinny bellies. And so basically, again, you just think about them as steps or like rungs on a ladder. You can find support here where you can stand there, but there's no support from here to here. There's nothing there. It's just a skinny belly, so there's nowhere for you to stand. So when you go into these areas, normally you'll get a quick movement to the upside. Again, you can stand here because there's support, or in this case, resistance, right? And then when we go back down, we're going to quickly step down to the next support area or stair on our stairs, right? Where we can stay here, but we can't stay in this area. Hopefully this makes sense to everybody. Anybody have any questions so far? Good. For what you're always looking for on volume profile is price to be accepted, right? And so if this is our range for the day, right, it means that all of the participants in the market are happy with price being traded in this range. So everybody's content with price being in here. The bulls are happy, the bears are happy, and price is staying in this range, right? And then one thing I need to cover really quickly while it's on my mind, there's never such a thing as more sellers than buyers or more buyers than sellers. And the best way I can explain it is like, if I want to buy something that's very rare, and I always use this example, even though I would never buy something like this, but like if I wanted a pair of Tiffany Jordans, right? Which again, I would never buy and I would never wear them. But if I did, if nobody's selling them, it doesn't matter if I'm like, oh, I'll give you 10 grand for them. I'll give you 20 grand for them. If nobody's willing to sell at that price, nobody's selling and I won't be able to buy a pair. So if I want to buy Spy at 529 and nobody's willing to sell it at 529, I'm not going to be able to buy it. So like sometimes you'll hear people like, oh, I placed an order and it didn't get filled, whatever. Like, I don't understand. I bought an option contract at 129 and I didn't get filled. There was no sellers at that price. And that's why you didn't get filled. So for every transaction, there has to be a buyer and a seller. For me to buy a pair of Tiffany Nikes, there has to be somebody willing to sell them to me at the price that I'm willing to pay. So we never have more sellers than buyers or more buyers than sellers. What we have is either more aggressive selling or more aggressive buying. So if people are aggressively clicking the market buy, that's going to push price up. So if there's more aggressive people pushing market buy than there are people pushing market sell, price will go higher. If there's more people pushing market sell than there are people pushing market buy, price will go lower. But for every transaction, there has to be a seller and there has to be a buyer. It's just who's being more aggressive, right? So like if I really want that pair of Tiffany Nikes and I'm like, oh, I'll buy them for 10 grand, and everybody's like, nope, not going to happen. And then I go, okay, I'll give you 15. And then I have 20 people wanting to sell it to me, right? So in that instance, I would be the aggressive buyer. Hopefully that makes sense. Um, so again, we're always looking for where price is being accepted. And the way that we find where price is being accepted as far as as far as trading is concerned is if we look at, let me see here. If I draw in my, so we're always trading like off of the previous day, previous week, previous month. So if I draw in my previous day value area high like this here, price wasn't, like price wasn't happy here. We pushed higher on the next day. So they found value here in this range. But so for our previous day, when we're trading the next day, what we're really looking for is, this happened twice on this day, and both would have worked. So if this is the high right here of the day, right? We're looking for, and I'm not going to even talk about this here because we're wicking back. Actually, we will talk about this. Let me see. I'm actually going to turn off SVP so it's a little bit easier for everybody to see what I'm looking at. But this is our previous day value area high right here at the bottom, right? This purple line. And actually, let me just quickly, bro, this is our open here. So we came up to our previous day value area high and we rejected. You could argue puts here, and you wouldn't be wrong. I do talk about this, but this is more for people that are okay with putting on more risk. When price quickly peaks above a level and then falls back below it, you can immediately hop in puts and play it down. Whoa. The issue, like for me, if I took this trade, I would be looking to close right here. Right? I wouldn't be looking to go lower. This arrow is bugging me. Sorry. Let me redraw this. So when we have this quick peak above and then fall back inside, basically right there you can immediately take puts, and I would be targeting right about there. So bring this forward. Generally though, you will break below this level. It's just at that point, like, you would have to figure out where you're trying to exit the trade. And if that's the case, like, you just look left. And if you start looking, like, for me, this is a very clear support resistance level where hopefully a lot of people that are watching this video have read volume profile. What's up, Silver? We're always looking for support being turned into resistance and vice versa. So in this case, price came up to here, rejected, right? This is our resistance right now. And then when we broke above it, it became support and support, support. Kind of broke through it here. That's okay. But so this is our SR flip on this lower time frame. So like if you're not exiting here, you probably definitely want to exit here. Your next level would be probably right about there, which would have missed. You wouldn't have hit your target. But I mean, if you're using trims, which, like if you took several contracts, you could trim one here, trim a second one here, and have like a runner targeting here. And when it pulls back to 529, you exit, still with a win. But I'm not going to be talking about like trim levels and all that stuff. You just want to find, either you target the low or the high, or you look for the next, support resistance flip based on your candles. Okay. And you want to plan this before you enter the trade. You know, like as price is approaching the previous day value area high, you want to say, hey, if price peaks above this and falls back inside, I want to take puts. And then you want to immediately grab your short position tool and figure out where your stop loss would be, and figure out where you're targeting for profit, right? And generally for me, like I would be looking at this and I'm thinking like, okay, the last time we went above previous day value high and then fell back inside, the high was here. So for me, I want my stop loss to be above that high, right? And as long as I'm able to get double what I'm risking, I'm willing to take the trade, right? And then the further that we go, I'm going to erase this little arrow. The further we go away, the more reward I'm getting for my risk, right? But the key is my first trim level. Thank you, babe. Am I able to get, that 2-to-1 risk to reward? And in this case, I'm risking $1 to make $3.25. And as long as you do this, as long as you're like 34% right, doing one risk to reward, you're profitable. If you're 50% correct, you're very profitable. If you're doing 1 to 3 and you're 50% correct, you're very profitable. One of the hardest things as a trader is being okay with losing. And that's like the most important thing of being a trader. Once you become a good loser, you'll start to become profitable as a trader. For people, like two things when we're trading, we hate to be wrong. And on top of being wrong, you're also losing money, which is a major blow to the ego. And when both of those things happen at the same time, it's very hard to swallow. And the better you are at swallowing that pill, the more likely you are to be successful as a trader. So this is important. I know a lot of like more amateur traders will not listen to me on this, but when you enter a trade, you need to accept your risk. So like if I say my stop loss is here, let me change the color of this so it stands out more. Oops. If my stop loss is here and my take profit is here, only one of those two levels should get hit. I'm either in the trade or I'm not. Like I don't, if price does this, like let's say I get in the trade and it comes up, gets close to my stop loss and then comes back down and then bounces back up and then comes back down and then bounces all the way back up to my entry and then finally comes down and hits my take profit. If you're the person that's like, oh, when price came down to here, let me move my stop loss, they tapped you out here and then it went lower. And then they definitely tapped you out here and then it finally went to your take profit. If you're moving your stop loss, what ends up happening is 100% of the time, when price goes against you, it's hitting your stop loss. Or even worse, as price is approaching your stop loss, you change your plan and you go, oh, let me move it to here. And now I'm no longer getting $1 risk, $2 reward. I'm below that. And then price still comes up and hits my hits my stop loss. So I just took a bigger loss than my original plan. Yes, motivate me now. I'm sure that you know that I would 100% stay away from using EMAs. EMAs, MACD, RSI, all of that stuff is lagging indicators. They're not helping you. They're helping you be liquidity for people like me. I sell to you guys. I sell to the people using MACD, RSI, moving averages, whatever else. Like I'm selling my positions to you guys. So unless you want to be buying my position to take a loss on it, I would suggest you don't use those. So this is one of the worst mistakes that the more amateur traders can make is as their stop loss is getting approached, they move it away. And then it ends up getting hit anyway, and you end up taking a bigger loss. And then the issue is as price is going towards your take profit, you're doing the inverse. So as price is approaching your stop loss, you move your stop loss away, but as price is approaching your take profit, you're not moving your take profit down. You actually do the inverse and you bring your stop loss closer, so then you get stopped out earlier. So you're never hitting your take profit, or very rarely. Like when you get a quick move suddenly and then it goes and hits your take profit, you hit your take profit. But most of the times you're getting stopped out at 100% of what you were willing to lose. And your profitable trades, you're never reaching your take profit because you're moving your stop loss. So, got to stop moving your stop loss and have to accept your risk when you enter a trade. If you start to get nervous, like when you're in a trade, you are over positioned and you need to trade with smaller sizing with, risk that you're willing to lose. So that's important. But you shouldn't be like stressed out about price coming to your stop loss or about price going to your take profit. Basically, like you should be able to put on a trade and get up and walk away from the computer and just be comfortable that it's either going to hit your stop loss or hit your take profit and nothing in between. So back to our volume profile entries. We're not interested in something like this here, where price is like coming above, closing below, wicking above, coming back to it. This is just sloppy and like we don't really know what direction they're choosing, right? And so what we were talking about earlier is we're looking for price to be accepted, right? And so here where price breaks through, and this doesn't work out, so it doesn't matter. This trade wouldn't have gone in our favor, or I don't think it would have. We'll figure it. Actually, I'm pretty sure it doesn't, but that's irrelevant. We're always trading probabilities. So like I can show you whatever 100 trades and 70 of them work and 30 don't. I'm not afraid to show you guys like where it didn't work, because that's going to happen to you. And this is the key. Like when you're learning from people, if they're not talking about the losing aspect of trading, they're not trying to help you become a better trader. Because like I said, it's once you accept losing, once you become a good loser, is when you'll become a good trader. And so the people that just show win, 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 or you see like people that say like, oh, 100% win rate. There's no such thing. There is no such thing as 100% win rate. Maybe over a small sample, like 10 trades. Yeah, you could be 100% correct for 10 trades, but you're not going to be 100% correct over 100. It's physically impossible. So I'm fine with showing where this doesn't work, which is what's happening right now, because that's what's in front of us. So what we're looking for as traders using volume profile only is you want price to break through your level. And you want it to be clean. You don't want wicks up and down or whatever. So here, when we broke above this level, we closed above, right? So the close on this candle is right here. We're above our value area high. Our next candle also closes right a little bit above that, but it doesn't matter. It's just all that matters is that it closes above our previous day value area high, and then it's not wicking back down below. The candle after that also closes way above our value area high, right? And so right now with 3 5-minute candles closing above our value area high, it's pretty safe to say that the participants in the market are happy trading in this area, right? So that's what we're looking for, is basically confirmation that the participants are happy being above value area high. And so when this happens, we're looking for 3 5-minute candles to close above a level, which we have here. And then we're looking for price to come back down and retest our value area high, which is where we would enter into calls in this instance. Or the inverse, price comes below, we have 3 5-minute candles close below, Well, this is 2 losses back to back, but on the retest here is where you would enter puts. I think I'm gonna have to find some examples where this works because I'm showing you 2 times it didn't work. Um, but so um, when this happens here, basically you now have 15 minutes as a minimum because you're waiting for 3 5-minute candles to close above this level to enter into calls. So when you see 3 5-minute candles closing inside this, you have 15 minutes to draw, like, this is going to be my entry, whatever you're targeting. So like if this is, the high and you want to target that, we know that there's a chance that it goes higher. But if you want to be safe, this would be your take profit. If you have, like other, if we're not in price discovery above this, meaning that price is already traded in this area, then you can look to the left and figure out like where's our next like support resistance flips. And so you start targeting levels like this, right? Now, if I'm targeting the high here, then this trade wouldn't work 100%. Because like for me to not have been stopped out here, I would have had to be like almost a 1-to-1 risk to reward. If we move up to here, I still probably would have been stopped out. Yeah, I would have been stopped out. And if I'm looking like realistically, my stop loss would probably be one of 2 places. So like here, well, actually, depending on how big of a move I'm looking for, stop loss either there or here. And hopefully you guys can see what I'm targeting. I'm looking at like the wicks here and the wick here, or these wicks here, this wick here. And I'm just looking for that support resistance flip. If I was trying to be really aggressive about the trade, which I would not be, my stop loss would be here. But again, like I would need to get a really big move to be able to take this trade. And there's just no way I'm taking this. I mean, there's no way that I'm taking this setup that I'm showing you because, or I guess I could probably take this one because I do have this level here, but any higher I wouldn't be able to justify because I wouldn't be able to get 2-to-1. And realistically, I wouldn't be looking for this trade. I would be looking for something like this. And my stop loss would probably be right around here, where I'm looking kind of at these candles here. Something like that. And I don't want my stop loss to be at exactly where the SR flip is happening, because if it's there, there's a chance it comes down and taps it and then goes, right? So I need my stop loss to be a little bit below the SR flip. And in this case, I would have got stopped out, right? But we're looking for those 3 5-minute candles clean, closing above, coming back, retesting, you enter calls, right? Or the inverse, we want 3 5-minute candles closing below, retest, enter puts, right? You do not want to see this. Like if I'm trying to look, so this is a good example here, like where we closed, this candle here closed at the level, and this candle here closed at the level. This candle closed above, this candle closed below. Like this wouldn't be 1, 2, and this is your third, and this is your retest. I mean, it did work out, but this is not what you're looking for. You're not looking for stuff wicking below, closing at the level, wicking back below, closing above, wicking back below, closing below. You're looking for a clean break, close above, close above, close above, retest, go. Okay? Just for fun, let's look for a time where this actually worked. Because, again, you have to be okay with losses, but I don't, like I want to show you guys where it worked so I can give you, like a good clean view. Let's see if this is any good here. Or actually, this might be way better to look at right here. We'll cover the 80% rule. I saw somebody asked about it as well. For the 80% rule, we're going to draw in our value area low as well. And then also our POC here. Go replay mode. And go to a lower time frame, and we'll see if this actually worked out. It did. Okay. I'm going to turn off the session volume profile just so it's easier to see everything. And this is like a perfect example of a trade that you're looking for using volume profile and using exactly what I was just talking about. The setup is going to be a little bit different. So in general, we're okay with price coming above a level. It doesn't have to be for a specific time frame. Coming back below, giving us our 3 5-minute candles below, retesting, enter puts, right? And then from there, you have to figure out like what your price target is. With the specific trade I'm about to show right now, we have our price target. What we're looking for is 45 minutes spent outside of our value area. And it can be value area high or low. So price could be down here for 45 minutes or up here for 45 minutes. It doesn't matter. So in this instance, we're doing puts, but for calls, you would just do the inverse. 45 minutes below, come back inside, 3 5-minute candles, retest, enter calls. Okay. But this specific instance we're covering is going to be for puts. And once you see this happen, so we see that there's 45 minutes outside. And if you're, if you don't want to count candles, which I wouldn't, you go to a 15-minute and you're just looking for 3 candles outside, and that's 45 minutes, right? Once we see that happens, and then we see price come back inside, this is where we start to plan our trade, right? So what we're going to do, for me, I'm immediately looking left. I probably want my stop loss above here. And I probably also would like my stop loss to be above these candles here, right? You can make arguments like for here, whatever. Like this is actually probably a good one as long as the risk to reward is there. So you can see we have resistance, turn support, support, and then it gets broken through and it's become resistance again, right? So pretty good spot to have our stop loss. Our take profit is going to be the previous day value area low. So as soon as this candle happens, we go, ooh, this could be an awesome trade. We're going to grab our short position tool and plan out our trade. And we've already established, like, we want our stop loss to be above this here, this support resistance flip here, right? This should not be hard to do. It shouldn't be hard to look and see like where candles are rejecting and then where candles are bouncing, right? It's not going to be perfect. Like you're going to have some that come below. This comes below, but it ends up closing above. Like that's your sign that that's a support and resistance flip on a lower time frame. And then as a market maker, like if you're trying to get people's liquidity, so like you're like, oh, a bunch of people are going to be entering puts here. So let me bring it up to this support resistance flip and grab their liquidity. And then we're going to make the move, right? So you want to make sure your stop loss is slightly above the level that you've established is support and resistance, right? Because you don't want price to come to that resistance and hit it and then stop you out, and then the move happens, which I'm sure has happened to a lot of people a lot of times. It happens to me sometimes, and it always sucks. So as soon as this candle breaks below, we plan out our trade, and we can see right now we're getting $3.55 for our $1 wrist. And what we're waiting for is 3 5-minute candles to close below this level, retest it, and you enter your puts. So we got 3. This is our first one, our second one. This is our retest, or this closed below. Technically, this would be our retest. Me personally, as a trader, like 1, 2 closes below, I would probably take this retest on the third candle as my entry. But you really do want to wait for the 3 closes below and then the retest, which we got, and you would enter puts. And then you can see like we came back above a little bit, and then we got the full move. And the full move is when this happens. So again, we're looking for participants in the market to be happy. The fact that we were out here for 45 minutes or more, and price still was able to fall back inside here and trade for 15 minutes shows that participants were not happy out here. And when that happens, there's an 80% chance that we're going to go from one extreme to the other. And in this case, the extreme is from value area high to value area low. Or it could be, again, from value area low to value area high. So these are massive when they happen. Like on SPY, you might see it like twice a week, maybe once a week, sometimes 3 times a week. They don't happen every day, but when they happen, you want to trade them and try to catch the full move, because there's an 80% chance that you're going to get the full move. Some people will just take from like value area high to the POC, which I wouldn't recommend because there's an 80% chance that we're coming here. So 80% chance of this, 20% chance you get stopped out, right? Or 80% chance that we come here, and a small chance that like it comes down and then chops sideways the rest of the day, and you end up still closing in profit because, like you're whatever, playing 0 DTs or whatever, or you're just planning on doing a day trade and you want to close before the market closes and you don't want to swing the trade. You would still be able to lock in profits, and then there's a chance that they come up and hit your stop loss. But probabilities are on your side, 80% that it comes to here, right? I know there's at least one person in Keenan's Discord. I don't know if this is still true, but I know there was one person at one time at least that only traded the 80% rule. So this person was super patient, and he would just sit and watch, like every day, SPY, and wait for an 80% setup. He would take it, and he showed me his P&L, and he was like super profitable. But he's taking like, sometimes 1 trade, 2 trades, 3 trades a week. But when he takes them, they're bangers, right? So that's super important as a trader, is you want to be patient and you want to wait for good setups. And 80% rule is like literally the best setup that you can wait for. So again, anytime you see this, you want to take it. 80% chance you're going from one extreme to the other. And in this case, it's like this is a $5 move on SPY, which is massive, right? And it went pretty quickly. So theta wouldn't have got eaten up too much. It would have been great. Little mind, if you have the patience to do it, you will absolutely like kill it in the market. What's up, Money Mark? So that's going to be the 80% rule. Let me get this stuff off my chart. I have a little dot there. And then so when we're trading, there's a few things you want to pay attention to. This is not specifically, volume profile, but, we'll have price move kind of like this, right? And then price moving like this, and then price moving like this. So you want to try to recognize the trend. Obviously, here to here is an uptrend, right? We're making new higher highs. In this range, we're chopping sideways. And then from here, downtrend where we're making new lower lows, lower highs, lower low, right? Personally, I love trading this here where you just grab puts at the top and calls at the bottom, puts at the top, calls at the bottom, puts at the top, calls at the bottom, puts at the top, and then try to switch to calls here and it doesn't work. But it worked 6 times in a row, so who cares? You know, like 6 wins, 1 loss, I'll take it all day, every day. If you give that to me, like if you told me right now, for the rest of your life, you can have 2 wins every single day and 1 loss every single day. Do you accept that? I'd be like, yes, 1,000%, give it to me. Or whatever, even better, 6 wins, 1 loss. I'll do that all day, every day. I'll have a big old smile on my face. I'll be happy. So I personally love when we kind of chop sideways and trade in a range. And again, like it's easy to spot with volume profile because you can see that the participants are happy trading in the value area that they're trading in. So you just find the top and the bottom. And I guess this is a little bit more advanced, but let's look for it. And when I say it's more advanced, I would recommend looking for good quality setups when you're trading. And what I'm about to show is not good quality setups. But so like, let's use this day for example, where we're kind of trading in the same range. It's a little bit, oh, this is going to suck. Yeah, I want to exit replay mode. Now I have to find that day again. It was here. Okay. So, shoot, I don't want to do this. Thank you. If we look at this day, the beginning here would be hard to trade. But I'm guessing like the value area low might have been, no, it was probably lower at this time. But by this point here, our value area should have been probably established. And when you see price go above the developing value area and fall back inside, you take puts and you're targeting the far side because so far they're showing that they're happy, you know, trading in this range here. And so from here, when we fall back inside, take puts, you target the far side, you close when you hit the far side. And then when price comes back below and then back inside, you would get back in calls. And again, you're targeting the far side. I don't know with this wick here, you might have got stopped out. I'm not sure. I'm not going to do, you know, the long position and measure it out or whatever. But even still, if you got 1 win, 1 loss, and you're doing, you know, 1 risk, 2 reward, you're still profitable on the day if you take 1 win and 1 loss, right? So, right on. So that's another thing you can watch for, but really you want to just look for good quality setups. And I'll cover those a little bit more in a minute here. So far, we've used the PVP indicator, right? And I'll cover the settings again just really quickly. Value area volume is 68, row size 100. We're going to be turning on value area high, value area low, and POC. And we do this on the 1-day chart. Oh, sorry, I forgot to mention this. 12-month period, right? And this will give us our yearly or our previous year volume profile. Next, we drop down to the 4-hour chart. And these time frames do matter because on different time frames, these levels will move, which is why I draw the lines. Um, on our PVP indicator, we go into the settings. We're going to change this to 1 month. Everything else stays the same. And then now what we're looking for is going to be our previous month. So in this instance, we're going to go July here. Here and here. And and then you don't have to color code your stuff. I color code it because for me, it makes it stand out when I'm trading. Um, and then I'm going to change these to, dude, can you guys chill? Sorry, I'm going to put my phone in do not disturb. That's really obnoxious. Like anybody, if you have my number and you text me 6 times in a row, all you're going to do is piss me off unless it's some kind of an emergency. And if it's an emergency, you should just call me. Um, okay. So now we have our July value area high, value area low POC. And this is actually going to be a regular POC. It's not a virgin POC. And then I can kind of show that on this one. Um, July ended, you know, here. And on Thursday, August 1st, we came down and we hit the POC. So that changes it right there from virgin here to non-virgin here. Okay. If you look at my charts, I have, like I don't delete the months off of my chart. So like May, June, July, I have all of those on my charts. I'm not going to go back further. But specifically like with SPY right now, since we're trading in this range, you would want to have May on your chart, right? And if you have May, I want to see, you might have got an 80% rule to the downside. Obviously for like going with a, what's it called? Yeah, you would have killed it. When you go with, sorry, I don't know why I can't speak right now. When you go with a monthly 80% rule, you're going to need to take like a swing trade, probably like a couple weeks out at a minimum. And if you did that on this, you would have killed it, right? So if we were watching May, right, price broke below, and right there you go. And we already know we spent way more than 45 minutes outside of May, right? We're like way outside for months, right? So as soon as price comes back inside, we go, oh, this could be a banger. And so we're going to click our short position tool. This is our target. And then you just have to figure out where your stop loss is. For me, like I would be looking really kind of at this. This is the first thing I would be looking at is right there. If I'm looking left, yeah, same thing, same level right here. So like I would want my stop loss above this, which is basically the level that I've already established, right? And again, we say we want our stop loss above it. Like you want to be a little bit above that, nothing crazy. But just in case they bring price back up to there to get people's liquidity, you don't want to be a part of that. You want to be above that. And even with that, we're at a, $3.34 to $1 risk, right? And we know that we have to swing this. And so this is like, what? This is August 2nd. Yeah, August 2nd, it would have been chopping. You're 2 weeks out, so you're not even like stressing it. And then the very next day, like you open and you're way below your value area low. I wouldn't expect this to happen so quickly, which is why you're taking contracts, 2 weeks out, or your play is 2 weeks out. You probably want your contract to be like a month out or whatever, so that theta is not destroying you. But um, you would generally expect this to happen in like a week or two. This in this particular instance, we got lucky and it happened overnight, right? Um, and then while I'm thinking about it, once this happens from top to bottom or bottom to top, that's it. That's the 80% rule. That's it. It's done. When price comes below here, even if it is below here for 45 minutes and then comes back inside, we have our 5 minutes candles closing above retest. You don't enter long here, or you don't take calls here. It's done. You just play it one time. That's it. And in and out and call it a day. So 80% rule works on every time frame, yearly, weekly, monthly, and also the previous day. So we're looking at the previous day, previous month, previous week. And you can go back further on the months, which I do, previous year. And you're just kind of looking where price is trading at that moment. So like I said, right now, with where price is, our range here, you want to have May on your chart, right? Because we're trading again, or at least we were. We just peaked above May, but for what is it, a few days there, we were showing that price was happy back inside of this May value area. Okay, so we're always just kind of looking left and seeing where like what value area price is accepting at that moment. And so just to be clear again, our monthlies, we chart on the 4-hour time frame. From here, you're going to drop down to 65 minutes. If you don't have 65 minutes on your chart, you click this add custom interval and just type in 65 minutes and then save, and then you'll have 65 minutes. On PVP now, we're going to go to everything's going to stay the same except for we're going to change month to week. And with this, we're just looking for our previous week. And this is kind of cool. I can show you guys something fairly interesting. We'll pretend, just for the sake of the class, but also to show you guys how I kind of chart, that this is our previous week right now, but it's not. It's down here, but we'll just pretend, right? We're going to draw our value area high, and we're going to draw our previous week POC. And as you can see, our previous week value area low is basically the July value area low. There is a slight, I don't know, like few pennies difference. But for me as a trader, in this case, I just go like this, put a little dash, and previous week value area low. And then for me, basically, I just know like this is a stronger level where I have multiple things lining up on the same line, right? And then when you're charting, so once a week, you're going to have to grab your previous week value area high and drag it down to your new previous week value area high. So like Friday, after the close of market, or Saturday or Sunday, you want to chart this for the next week, and you want to grab your previous week POC and drag that down. So it gets pretty easy day-to-day charting once you've established your chart. But starting from scratch and then, charting everything out takes a little bit more time. And then now I'm going to erase this because it's no longer going to be my previous week value area low, but it's still my July value area low. And draw in my previous week value area low here. And then, now I'm ready for Monday when they open as far as my weekly value areas. And then from here, we're going to go to the 30-minute time frame. And we're actually going to turn off the PVP indicator. And we're going to turn on session volume profile, which I showed you guys at the beginning, but we can go over it again really quick. SVP, we're looking for session volume profile. You are not looking for session volume profile HD. In this instance, HD is not better than standard definition. Our settings on this are going to be basically the same. Value area volume 68, row size 100. Under style, check value area high, value area low, POC. Just in case there's people that aren't watching from the beginning, you need to make sure that you're paying for live data. And then for people that are wondering what that means, like for people that are trading anything that's not, what's it called? Anything that is not futures, you're just going to need NYSE, NASDAQ, and ARCA. And I think there's like there's actually like a package that's cheaper if you buy all three together. If you're trading futures, you're going to need the CME Globex. And that's it. Or this group, actually, sorry, is the one that you want. CME, CBOT, COMEX, and NYMEX, CME group package is $7. This stuff, like, again, I think it's like $9 to buy the package for the non-futures plan, and then like $7 for the futures. You guys should, be okay paying that. Like it shouldn't break the bank. If it does, then you shouldn't be trading. Okay. Back to where I was. So session volume profile, value area volume 68, row size 100, check value area high, value area low, POC. And from here, I don't think I mentioned this earlier, but you want to make sure you're on regular trading hours, and you want to make sure that adjust for dividends is turned off. Okay. On this, I'll just show it again really quickly. Every day, basically. Oh, and I also had somebody message me like, oh, my lines don't quite like cover the full blue line. You want to change it to 2 points or 2 pixels or whatever this is. I guess it's 2 pixels, yeah. And then it will match up better than 1 pixel. And so normally I would just include this POC in my previous week, but I'm about to move it, so I'm not going to do that in this instance. And so what I'm showing here is basically every day after the market closes, as long as it's like Monday, Tuesday, Wednesday, Thursday, all you have to do as far as volume profile is concerned is grab your value area low, move it to the end of the current day, grab your POC, move it to the point of control of your current day, and then grab your value area high and move it to the point of control, to your value area high of your current day, and you're done charting. That's it. So daily, you're moving 3 lines basically as far as volume profile is concerned. And that's going to be volume profile in a nutshell. But now I'll just cover again, like the types of trades that you're looking for is, what's this? So you want to see like price come above a level, right? 3 5-minute candles, retest, and then you're basically going to be kind of targeting your next level, or like the next area that you establish as like a support and resistance level, right? So there might be a level between your current level and your next level where you think is like strong support and resistance, which I kind of see right here. This is a pretty strong support resistance level on the 5 minute chart, or 30-minute chart actually, where if I was taking calls here, my first target would be here where I would trim and take some profits, right? My stop loss, I probably want below this or below this candle here. So don't make this stuff too difficult, right? So stop loss here, and then this tells us we can't take this trade, right? So you go, oh, based on this stop loss, I can't take the trade. If I'm okay with this here, then I can probably take my trade, right? Yep. So we have to plan out every trade. With volume profile as a minimum, you have 15 minutes to plan your trade. So there's no excuse. Like, oh, I didn't have time to plan a trade. Bullshit. If you didn't have time if you didn't have time to plan the trade, then you're not trading properly. You're YOLOing, you're FOMOing, like, and you're just gonna get clapped. And if that's the case, like, I'll literally give you my Zelle info, and you can just send me the money, and we just save both of us time and heartache. And you can just give me your cash, and we'll call it a day. Right? So make sure you plan your trades. Figure out, so like on this, as you can see, like I didn't necessarily target the wick. It could be the bodies of the candles where they're opening and closing can be support and resistance. But even still, like if I'm targeting this, my stop loss is still slightly below that wick, right? So I'm just kind of trying to show you guys my thought process. And if you've established like, oh, my stop loss needs to be here, but I can't do it because I'll be below, 2 to 1, then just look for the next setup. And that's it. Like you don't force trades. If you do, you're going to end up losing, and you're going to end up not succeeding in this game. Another example would be, you don't go, oh, 3 5-minute candles closed above this level, we're retesting and going calls. I mean, I guess, yeah, no, you can't. This is like a 60-cent move. So your next level is 60 cent above. You're not looking to trade this, right? If you miss getting in calls here to here, and then like taking a trim at the POC and closing your position at the value area high, then too bad, you missed it, right? But you don't try to trade this crap, okay? I don't know if you guys can tell, like in the tone of my voice, like, but I'm like, if the setup's not there, like too bad, and I'm being very blunt about it, like it is what it is. Or if you missed, from here to here, too freaking bad. Like I hope you can hear the tone of my voice where I'm literally like no fucks given, excuse my language. Like it doesn't matter. If the setup's not there, you don't take the trade. If you miss the setup, you don't take the trade. You just wait for the next setup. If that means you don't take a trade that day, cool. You don't take a trade that day. The people that are going to make it in this game are the people that are patient and that wait for good quality setups and take the trades. And when they realize, oh, crap, I missed that good quality setup, then, like I'm not going to take that trade. You're going to be the ones that are going to be successful. The people that are like, oh, crap, I missed that good quality setup. Like it bounced a point ago, but I'm just going to YOLO in here and try to catch the rest of the move. You're the ones that are going to end up either changing your ways or you're going to blow accounts until you finally give up. So you have to decide as a person who you want to be. If you want to actually like do this properly, when you put on your trade, you accept your risk. You either hit your stop loss or your take profit. I don't care if it comes 1 cent from your take profit and then goes all the way back down and hits your stop loss. It is what it is. That was a losing trade. Until you're that person that's like so stubborn, like who cares? 1 point away from my stop loss and it rejected. Hopefully it bounces and goes back up and hits or 1 point away from my take profit. Hopefully it bounces and goes back, and hits my take profit, but it doesn't. And it ends up going and stopping you out. that's the trader you need to be. I hope that doesn't happen to you, but that's the seriousness of this. Like, you have 3 levels on your chart. You have your entry, you have your stop loss, you have your take profit. There's nothing in between. We don't move our stop loss unless it's part of your plan, right? So if I say I'm going to go long here, and my take profit or my first trim is here, and I want my stop loss to be below the previous week value area low, or value area high, sorry. I can do this. I'm getting $2.23 for every dollar I'm risking. When price does this, let's just say I took 2 contracts, right? And when I took this trade, my plan was to close 1 contract here. And then I'm moving my take profit to here. And my stop loss, I have to move my entry to be able to move my stop loss just with this tool. Or actually, I can just do this. My stop loss now becomes my entry, right? So worst case, I took profit on 1 contract. And if price does this, then on my second contract that I have, I'm closing break even. I still made profit on the trade. But part of my plan on this trade was, if it does this, I'm securing profits here, moving my stop loss to break even, and then locking in more profits at the previous day value area high. From here, if it comes down to break even, I'm closing my trade. This is how professionals trade. You have a plan, you follow your plan, and you don't deviate from the plan. You don't start moving your stop loss after you enter a trade unless it was part of your plan. Meaning, if price comes down to here and you start to get scared, you don't do this. That was not part of your plan. And actually, like, fear should not be a part of trading. If you're feeling fear because you're in a losing trade, you're oversizing for your account size, or for your psychological levels. Like, if you're feeling fear in a trade as price is approaching your stop loss, then your size is too big. You need to trade smaller to where you're not you're not scared to take that loss. Because as a trader, you should know, like, you're going to take losses, whatever it is, 20, 30, 50% of the time. It's going to happen. Probabilities say that you can get 18 wins in a row. You can also get 18 losses in a row. So you need to be prepared for that. Okay. Let me just read through chat really quick because I've missed some stuff. Well, Timothy, first of all, welcome. Hospital during therapy. I hope everything's okay. I don't, is it like physical therapy or something? Anyway, hopefully everything's good. The good thing about this is they're recorded, so you can always go back and rewatch it, right? What's up, Leo? What books to read in what order? The order is not so important, but the books are going to be listed in the description of the video. Actually, I'll just put them in the chat really quick. Let me see. Give me 1 second here. Hopefully that works. That looks like 2. All right, let me do this again. I'm just going to post each one individually. So there's the books. I would also add, if you're, where is it? if you feel like you're a total amateur, and I'm not saying that to be insulting or anything, but if you don't understand like technical analysis, it doesn't, you don't have to understand it like on a professional level, but you have to have like a general understanding of technical analysis. If you don't, you're also going to want to read this fourth book as well. As far as the um, which order to read the books in, it doesn't matter. If you qualify as that amateur that doesn't understand technical analysis, then start with the technical analysis book. Um, and you don't need to read it to a point that like you've memorized everything. You just need to read it to the point that you have an understanding of what technical analysis is. And then the other three books, you want to read them and have a good understanding of what you're reading. And then, yes, you DM me for a one-on-one and we'll go over everything and put you on some good game. Okay. The, I will say this, like just one of my pet peeves is people that DM me and say, "Hey, I'm reading the three books." And when I say this, I'm not trying to be disrespectful, but I honestly don't care. Like, I'm happy for you that you're trying to better yourself. Like, I'm always reading. I'm always trying to better myself. Like, um, if you think about life, like you are basically the people that you surround yourself with, right? My wife actually made me think about this morning. This was her wise words, right? So the only way that you level up is like if you meet somebody that's at a higher level than you, like whatever, let's just say higher level in trading, and they're like, "Oh, hey," and they start showing you like little gems, right? And teaching you little things here and there. So the only way that you're going to level up is through like somebody that's better than you at something, taking the time to show it to you, right? Or you pick up a book and you start reading. So really like the people that you surround yourself with, you know, you look at very successful people, they surround themselves with very successful people. They're not hanging out with homeless people. You look at homeless people, they surround themselves with homeless people. And I'm not talking down to them or whatever. You look at, you know, middle class, they're going to be surrounded more by middle class people. They might have like the odd wealthy friend here and there, but the majority of their friend group is going to be middle class people. And the same thing for wealthy people. The majority of their friend group is going to be wealthy people. And it's because they can relate to each other, right? And so the only way that we can level up ourselves is by like absorbing knowledge from somewhere. And that's either going to be through people that you meet or by picking up a book or watching a video or whatever it is. When I say that, though, I will say be very careful about what knowledge you're absorbing on the internet, right? And I mean, you guys have no way of trusting me. Like right now, you're absorbing my knowledge on the internet. But there's a lot of people out there that are just looking to make money off of other people, right? I don't know a single other trader. There might be people out there, but none that I know of that would be like to just completely random strangers on the internet. "Hey, read three books, DM me, I'll do a free one-on-one with you." I could easily charge, you know, $300, $400, $500, $600 for that one-on-one. But that's not who I am as a person. My mentor took me under his wing and mentored me for free. And I just kind of give back to people now. That's the way that I operate. I'm all about karma and good vibes. And so that's what I do. But so you want to look for people that are genuinely wanting you to level up, that aren't trying to profit off of you. Where most people that you see, they're like, "Hey," they'll tell you a little bit of something and then they're like, "Join my Discord," or "Pay me for a one-on-one," or "Pay me for a mentorship," or whatever. Yeah, exactly, Leo. So where was I going? Some people could argue like there is a link to a Discord in the description of my videos, and that's my mentor's Discord. And you could argue like, "Oh, he's trying to make money off of us because he has a Discord listed in the description." I don't make money if you join that Discord. The reason that Discord is in the description of the video is because I truly, genuinely believe from the bottom of my heart that my mentor is a good person and he only is looking to help people level up. And if any of us can get onto his level, we will be doing very well in life. He doesn't need to make money off of a Discord. He has a very, very good 9 to 5 job, making very good money that most of us would love to be making every year. And on top of that, he's an amazing trader, and the amount of money he makes daily trading is disgusting. And so him as a trader, so him as a person, he has the Discord. It's not inexpensive. It's a little bit on the pricier side. But compared to some Discords, it's actually cheap. But the difference is he's an actual market maker that knows what he's talking about. And the Discord is focused on education and teaching people on how to be better traders. It's not about trying to make money off of you through a Discord. The reason that he has the price set where it's set is because he's not looking for people that aren't willing to invest in themselves. So like if you're not willing to, like put in the time and the work and the effort, he doesn't want you in the Discord because you're just going to cause problems and it's not worth his time. Okay. Little mind, like if you're feeling it, I would do it. And when I say that, don't join today. So if you're wanting to join, you have a few options. And again, like this will probably show you like the genuineness of who I am. If you join today, you're going to get charged again September 1st, right? So you would get charged today and then 20 days later, you get charged again. If you join on August 20th, you'll get billed again September 1st, but you'll be refunded for the September 1st charge. It does take about 5 business days to process through the banks. So if you can't afford to be charged like twice in a 10-day period, then don't join on the 20th. But if you want to basically get 10 days for free, join on the 20th and then you'll get refunded on the 1st for your second charge. Again, if you can't afford that, then join on the 1st and then you'll just get charged the 1st of every month. Okay? I feel like I just kind of lost track, but we'll go very quickly again over what we're looking for. What I had mentioned is like you want to see price come above a level, 3 5-minute candles, retest. You would get into calls or get into longs if you're trading futures. Or we're looking for price to break below a level, 3 5-minute candles, retest, enter puts, right? Or enter shorts for futures. The other thing that we're looking at is like, this is, again, if you're looking to be that disciplined, good trader, that's waiting for those good setups, what I'm about to share is not for you. Okay. But if we come, like whatever, we come from here down to here, go a little bit below, come back inside, you would enter calls, and then you're targeting, the high again. This is of the developing value area. I know I'm using the POC, but this would be our developing value area high and low. I'm just using these 2 lines on the chart right now. Come back inside, you would enter puts. You're going to be targeting the value area high or the value area low again. If we go a little bit below, come back inside, you get in calls, target here. You can switch to puts here. And then let's just say we do this, come back up, you grab calls, and then it stops you out, right? Whatever, you got 4 good trades, 1 loss, and you're happy. Okay? But this is not like the patient discipline setup. Really, you want to wait for your retests. And so technically, like, if we bounce here, reject here, right now, this is my retest, right? So this is a good setup. We're having 3 5-minute candles close above, retest, go long, or take calls. So those are the kind of trades that we're looking for. Obviously, the 80% rule is going to be golden. That's the best trade that you can find. And that's going to be that. The one distinction for people that trade futures, you want to have extended trading hours on when you're charting this stuff. Not regular trading hours like you do for anything that's not a future. Okay? So that's going to be really the only distinction between futures and anything that's not a future is regular trading hours on or off. There are a few other volume profile things that you can use. One is going to be called fixed range volume profile, or FRVP. And with fixed range volume profile, basically, you can choose a range on the chart. So like, if I'm wanting to figure out where buyers are on this range here, I draw my fixed range volume profile from the, anywhere where we're in an uptrend, I'll be able to find buyers. And so with that said, like you look at your shelves and from here to here, I have buyers. I have some buyers here. I've got buyers here. I've got buyers here. A little bit of buyers right here. I've got buyers here. And I've got buyers here. And then there's a tiny bit up at the top. I'm not going to draw that. But this shows us where buyers are coming in this range, right? And then you do the inverse to find sellers. Like if you're in a downtrend, you can draw your fixed range volume profile and figure out where the sellers are coming in. I want to show one important thing with the fixed range volume profile. If I'm just looking to look at this here, right? Because actually this is better because this, like we moved up and then we had a sell off and then went higher. But so it would be better to look where the buyers are coming in this range, which would have shown us like this is a good spot to buy calls, right? So I have buyers that came in down here, and I have buyers that came in through here, and then a little here, a little there. But you can see they get smaller and smaller, right? The bigger volume shelves are going to be here and here. And then obviously like you have the issue of like, do I wait for this or do I buy here? And then the answer is pretty easy for me. Our previous week value area low is right here. This is where you buy, right? So you're looking for those buyers here. And then like what we just talked about, when we broke above the previous week value area low, we have 3 5-minute candles at least that came above, right? Retest, you enter calls. Okay, so this here is our retest. Perfect that we found that setup. And then for fixed range volume profile, as far as our settings are concerned, oh shoot, this is wrong. It doesn't really matter because we're not. But so generally, for our settings, we're using row size 100, value area volume 68, and under style, check volume profile, value area high, value area low, and POC. There's something important here that people tend to check, and they do it not knowing what they're doing. Fixed range volume profile gives me the ability to choose a specific range on the chart. On the settings, if I select extend right, I no longer have the ability to choose a range. All I'm choosing is the first candle, and then it's automatically going to drag it to the last candle on the chart. So you don't turn on extend right. Otherwise, you're not able to choose the specific ranges that you're looking for. Okay? The only other volume profile that we use, which we don't use very often, is going to be the visible range volume profile. So VRVP, visible range volume profile. I tend to use this like on larger time frames but I'll just show it to you. The settings are going to be row size 200, value area volume 68. And then you check these if you want them. I don't. I just have the POC because that's where you're probably generally going to get a reaction. So like if you're looking on a higher time frame, um, your visible range volume profile shows up on the right. Um, yeah, and then you can just see the volume shelves from there, and the skinny bellies. So like if I zoom in here, um, through here is all, well, really to here, but through here we have just this massive skinny belly. And so as you can see, anytime price comes to here, it's going to move very quickly, right? So if price goes back inside of here, it's going to start moving very quickly. More specifically, when it breaks above here, we have almost no volume being traded from here up to about there. Or not no volume. There's lots of volume. It's just very aggressive, where price is going to move very quickly from one side to the other. Okay. Again, I only use the visible range volume profile on larger time frames. I do use it. So like if you look at what's one of the trades we're looking at for tomorrow or Monday, Netflix, I think. No, that's not one that I'm looking at. Sorry, let me find it. Crowd. So if you look here, you can see I'm using a combination of volume profile. So like once we lose here, things start to open up, right? And so that's how I figured out my put entry. And I'm also using support resistance flips, right? And then you can see like this wick here is my first trim. And it's also like the end of a volume shelf. A lot of times, like, let's just say I'm in puts and I'm targeting getting out of puts at this volume shelf. A lot of times price will come down, and instead of bouncing at the top of the shelf, it'll normally go to the far side of the shelf and then bounce. Not always 100% true, but that's more often than not, it will bounce right before the skinny belly part, right? So that's what we saw right here. Price came down and we got like a quick, strong reaction back up on the far side. So if you did puts from here, you wouldn't target this side of the, I mean, you can for a trim, but your ultimate close would be like the far side of the shelf, or in this case, you could even go a little bit lower. But so you can see I'm using visible range volume profile as well as my support resistance flips for my levels, right? Technically, I wouldn't even want this second trim to be here, because from first trim to third trim is really just where my skinny belly is, and price should move pretty quickly. But for whatever reason, we got a reaction with these candles here, so I had to include it like as a possible bounce area, right? So this is just kind of a brief explanation of how I use visible range volume profile on higher time frames. You know, 1 day, 1 hour would be good. Even a month or a week is good. Anything over an hour, I would say, or even 30 minutes, I guess. You can use the visible range volume profile to figure out like where skinny bellies are, where prices will move faster. Okay. Okay, so Sadeville Blues, you should already know the answer to that question. So for one, let's just I'm not going to go to NQ, just because chart's kind of messy. Honestly, I need to read. I have to do charting on this for Monday, and I haven't yet. There's just so much stuff that needs to be removed right now, so we'll just look at SPY, and we can pretend it's NQ, right? Um, all day long, if you've been paying attention to this whole class, every single thing that I've said has been like break above a level, have 3 5-minute candles close above, retest, and enter long in the case of ES and NQ. So if we're waiting for 3 5-minute candles, why would we be on 1-minute candles? Um, and do my levels change on 1-minute candles? Right. So my level is my level. It doesn't matter if I'm on 1 second candles, 10 second candles, 3 minute candles, 1 minute candles, or 5 minute candles, or even 15 minute candles. The only difference between anything like 5 minute candles and 15 minute candles, I can easily see my 3 5-minute closes, right? Um, I can't on 15. On 5-minute candles, I can easily see my 3 5-minute closes to know that all three were above my level and that I'm not wicking back down below my level. Um, on 1 minute, I'm going to have to do calculations to figure out where my 3 5-minute candle closes are happening. And on 1 minute, like you're also going to get faked out a lot more, right? Like when you watch lower time frames candles, they move up and down so quickly, like it'll start psyching people out. So like if you take your entry on 5 minutes, right? Because you're looking for those 3 5-minute candle closes, and then you switch to like a 30-minute candle, you're less likely to get stopped out because you're not seeing all those quick like up and down movements. You're just seeing one massive candle like going in a direction. Um, but so the answer should have been pretty obvious. We're looking for 3 5-minute candles closing above a level. The easiest way to find 3 5-minute candles is by looking at 5-minute candles, right? So, and then I always go to this like the people that focus, and when I say this, I'm not trying to insult anybody or talk down to anybody. That's not my point. But when people are looking, like when people are asking about time frames to trade on, you're generally dealing more with amateurs, and that's who I would expect to be watching this video. And I'm not talking bad about anybody, but so often, and I already talked about this in this video, you have to be careful who you're absorbing knowledge from. You'll see a lot of amateurs say, oh, you shouldn't be trading on 1 minute. You should be trading on 3 minutes. And it's like, why shouldn't I be trading on 1 minute? Like, if my level is 518.67, it doesn't matter if I'm on a 1 hour chart or a 1 minute chart or a 1 second chart. My level is still 518.67. And if I know that's where I'm taking calls or going long, it doesn't matter what size the candles are when I enter the trade. My level doesn't move, right? So it just brings me to be very careful about who you're absorbing knowledge and information from. The people that are saying don't trade the first 15 minutes, the first 30 minutes of the market, like there is an actual argument to be made about not trading the first 30 minutes. But as you become a good trader, like who cares if you're trading the first 30 minutes? As long as the setup is there, right? So let's just pretend, right? Like this is my previous week value area low, and my previous week value area high is right here. And let's just say yesterday, price closed and went way below my previous week value area low. Or sorry, not May, previous week, right? And right at the open, price goes blink. Oops, I got to actually draw. And I get 3 5-minute candles that close above. And then my fourth candle comes down and retests. Am I going to miss taking this trade? I'm going to miss this because it happened in the first 20 minutes of the market opening? Hell no, I'm not missing this. Be careful who you absorb information from. Now, if there's not a great setup in the first 15, 20, 30 minutes of the market open, yeah, don't trade. Be patient, wait for a good setup, and then plan your trades and take them. And honestly, like the best thing that you can do as a trader is plan the day before, right? Um, I think I might be able to give an example of this. Actually, I know I can give an example of this. Let me just find it for you, okay? Give me 1 second here. The part I'm about to show we haven't covered, but I am going to cover it. So, um, mm, okay, bro. So I said this single prints mid. If you know, you know. Again, I haven't covered this yet today, but we will be covering it. Um, this is our single print mid on SPY. Or wait. Sorry, this is ES? No, this is SPY. I'm sorry. As soon as I looked at the price, I'm like, yep, nope, that's not ES. This is SPY. And so, for anybody that's been following me, single print mids, I'm looking for a reaction. If it's above, I'm looking for puts. If it's below, I'm looking for calls. And I talked about this when it happened. My price target would be the value area high. And specifically because this happened at like 11:40, 11:45. I'm not sure exactly what time, but it looks like 11:45. We don't have very much of the day left, so I'm not looking for like a massive move. If this happened at the beginning of the day, I would be looking for more. I would trim here. I would trim here. Um, Actually, no, I wouldn't. If we get above the previous day value area low, 80% rules set up, and I would be looking to target this. As long as this wasn't an 80% rule, which it might have been, in which case it's not going to happen. Or it could still play out a second time, but we don't trade it the second time. We only look for the first time. And so, like if this happens in the first 30 minutes of the market open, you take it. If you wait all day for this to happen, you take it. But you don't try to like force trades between here and here. You trade your plan. So the best thing you can do as a trader is look at SPY when the market's closed, because when the candles start moving, our plan changes, right? When the candles aren't moving, if you can establish like at this level, I'll be looking to enter puts, and at this level, I'll be looking to enter calls. And then that's the only thing that you trade the next day. Like, even if it doesn't happen and you're just sitting on your hands all day, you're going to end up being like the amazing trader that's making bank. Patience is so key in trading, and waiting for your setups is so key in trading. And your plan could be a lot of things, right? Like you could say, hey, if we trade for 45 minutes outside of the value area high, come back inside, 3 5-minute candles, I'm going to be taking puts all the way down to the value area low. if if we peak above, fail, I'm going to be targeting puts down to the previous day POC. Whatever it is. If price comes down, taps previous day value area low, bounces, gives me 3 5-minute candles, retests, I'm going to enter calls, target the previous week value area high. Whatever it is, you figure out your entire plan. If price comes below for 45 minutes, comes back inside, retest, targeting the value area high. So you figure out your entire plan when the market's closed, and then you only wait for those setups, because those are the good quality A++ setups that you want to trade, right? So that's as you're getting started, and as you're more of an amateur, if you can plan everything out the day before, it's going to work out way better in your favor. And actually, even you look at good traders, they do the same thing. My mentor, like basically every single day, posts a write-up like, if price comes here, I'm looking for a bounce. If price comes here, I'm looking for a rejection. If we break below this level, we'll be going to this level. If we break above this level, we'll be going to this level, blah, 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 blah. So he has an entire plan ready for the next day. It might be a lot of different scenarios, but every single one of those scenarios is a good setup. Okay. That's going to do it as far as the volume profile portion of this. I'm going to quickly look at a few other things, like initial balance. It can be tricky, but basically with your initial balance, the indicator that I use is called, hang on, sorry. It's this by Noop Noop. It basically just gives you the first hour of the market being open. As far as the settings for this, there's not really a lot that you have to worry about. Whoa. All it is you have to set the correct time period for whatever time zone you're in. Your time will be different than mine, but you just basically want the initial balance to start on the open of the New York Stock Exchange for you and end after the first hour of the New York Stock Exchange. And then the initial balance, like, it can be good. Like, once it's established, if we're trading in that range back and forth, like, you can just take, puts at the top, calls at the bottom. But if we break above and have, I believe it's 3 5-minute candles close above, then there's an 87% chance that the low of the day is set, meaning that price will not go lower than this. There's a 13% chance that price will go lower, but very, very small. And as you can see in this case, like, we got our 3 5-minute candles closing above, or we had 2 close above, but our low was still set for the day, and we ended up going way higher, right? One trade I do like to take is, and again, I wouldn't recommend this when you're starting. You want to look for quality setups, but peak above, fail, I'll take puts. Peak below, bounce, I'll take calls. But it can work out against you. Like in this instance, I probably wouldn't even take this because we didn't just peak above it. We went pretty high above and then fell back inside. But if I had took this, I would have got stopped out, right? But you can do, like here where we broke above, we have at least our 3 5-minute candles closing above, retest, you can enter calls. I probably, like, if I took calls here, I probably would have been targeting higher. But, as the day's ending, you're still in profit and you would close, obviously, right? Even though it's not the plan, like when the market's closing at the end of the day, you need to close your positions unless your plan was to swing the position, right? So initial balance is another tool that I use. It's good to have on your charts. I do use VWAP, and I'll show you what I do. this is the VWAP I use, but that's not available to you unless you're part of Shorty's Discord. But you can just use the regular volume weighted price average. And what I do is under the settings, this band multiplier I change to 0.013. And this gives it, like a little, instead of just a singular line, it gives the VWAP a range that tends to be more respected. I don't use VWAP as a place to take trades, but I will use it as a place to close trades. And I will also use it like, let's just say I wanted to get in calls on this retest here, but VWAP is right above it. I'll be like, maybe not a good idea because they might reject off VWAP and go lower. So, but again, I'm not using it to enter trades, just using it to either keep me out of a trade or as a possible place to close my trades. Other than that, the last thing that I'm going to cover is going to be SIGs, and I'm just going to do it very briefly. It's not complicated. I think people overcomplicate it. For our SIGs, we go to a 30-minute time frame. We turn on session volume profile, and we're just kind of looking for where we've been trading in the same range for at least 2 days or more. In this instance right now, I would not take these previous days. We are barely inside of the range here, but I'm not loving it. Like it's basically, we're basically outside of the range. And I would, like if this value area low is down here, then I would include these 2 days. But right now, this value area is definitely above this one. And it's close enough to above this one that I'm not interested in including these 2 days on my SIGs. But again, that's going to be like a personal preference. As a minimum, I would take these 3 days. I definitely would not include this 4th day. I'm just going to use these 2 days. So in order to draw SIGs, you need to have at least 2 days in a row that are within the same price range, or where the value area is in the same price range. So we just use our session volume profile just to establish we have 2 days here in the same price range. And then from there, we grab our fixed range volume profile tool and we choose the first candle and then the last candle of that price range. Once I've done that, I turn off my session volume profile just because it clutters the screen and makes it hard to see things. And from here, I'm going to draw the value area low on the value area 68, right? And then this becomes my first SIG. And then at the top here, we've got that little thing where we have 2 levels that are the same level. So we just combine the 2. Oops. What am I doing? And then from here, we're going to change the value area volume to 95. And this is going to give us our second SIGs. And then I can already tell you right now, my third SIG at the top is going to be the same as my second SIG. And so right now, I can already do this. It's the same level. I'll take my fixed range volume profile and change this to 99. And that will give me my third SIG at the top and third SIG at the bottom. So these are going to be places where you're really looking for rejections. So if we're having like a typical day where price is trading sideways, you would expect bounces at the first SIG, rejections at the first SIG, bounce at the first SIG, rejections, so on and so forth, right? If we're getting further outside of like value, you would expect like a bounce at the second sig or a rejection at the second sig. Generally, if we break the second sig, like there's a decent chance we'll bounce at the third sig or reject at the third sig. But once those get broken, we're probably looking more at a trend day. Okay. So these are very good to have on your charts. Anytime price comes to the second sig, I'm pretty much looking for a reaction in one way or the other, rejection from the top or a bounce from the bottom. And it's generally an area where I'm going to be taking calls or puts or shorts or longs if you're trading futures. Once you have those, we talked about single print mids. We don't have it right now on SPY. There's no single prints. But on TPO, on the 30-minute time frame, and for futures and for anything non-futures, you only do this on regular trading hours, not on extended trading hours. But down here, you can see basically TPO is everything split up in 30-minute blocks and then represented by a letter. So if I zoom in on this, you can see this whole A period is the first 30 minutes of the market open. We're on 30-minute candles, right? And from here down, this is all single prints, meaning that price was only in this area for one 30-minute time frame. If the B period comes lower, then there would only be single prints from wherever the B period touches down. Or if B period engulfed this whole area, like we have up here, like the H and the I, these are going to be poor highs. And then we have poor lows down here with the A and the B, where they're both side by side, right? So single prints, we're always kind of looking for a reaction being like a bounce. And the best way to explain that is, like a lot of the trades that we're looking for is, let's say price comes down, taps this, bounces, we get 3 5-minute candles or more closing above, and we come back and tap it again. We're expecting the same thing to happen. And then retail traders, you should see this. You're like, oh, double bottom, right? This is a double bottom. But the theory is like, if we came down and hit this and got a strong bounce, then this level is really strong. And the next time we come here, we should get another strong bounce. And so that's what we're seeing here with this A period, is we came down and got a really strong bounce and wicked all the way back up. So the next time price comes down to here, we're expecting that strong bounce, right? Where we have a poor low or a poor high, like that was not a strong level. We were able to touch it twice. So we kind of expect price to break through it and go lower, or break through it and go higher. So hopefully that all makes sense. That example that I showed was for this range on SPY on Thursday. And what we did is we drew our single prints. What am I doing? Oh, excuse me. We draw our single prints. And it doesn't go to the end of the block. It's the bottom of this candle. And at that time, the second and third SIGs were not here, just an FYI. But those are just going to be in the way while I'm showing this. Just imagine they're not there. Or maybe I can just hide them, I think. Yeah. And so I did show this on Thursday. I'm not great at math, so I have to use a calculator. And for other people that aren't great at math, you can just kind of follow along. The way that I figure out the mid point, which is where I really expect a reaction to happen, is I go, oh wait, this is wrong. This was not, well, whatever, it doesn't matter. I'm not going to be showing the exact example of where this happened, where we saw that bounce at the mid, but I'll just show you how to calculate where the mid is, and just know when you have a big range like this for single prints, you kind of are watching the midpoint for the bounce to happen there, or rejection if it's at the top. So what we do is you take 524.29, which is the top of our single prints, and then you take the bottom. You're going to subtract the two, 521 and 84 cents. So the range from here is $2.45. We're going to divide this by 2 to give us the halfway point. And then the easiest way to figure out where this is on the chart is then you add that to the low. So plus 521 and 84 cents. And our midpoint is going to be 523. So then you just grab your line and put it there, and just put so that's how you find your mid. Basically, we're looking for a bounce anywhere in this range, but it's most likely to occur at the midpoint. Okay, and that's where you would be hopping in calls. And then the inverse, if it's at the top, like single prints up here, you're looking for a rejection there. Okay, I'm going to take this off the chart or actually you can leave these on, because this has not been tapped since it was created. So there's a chance that price will come down to here and bounce. I'm going to unsplit this by blocks. And then here at the bottom, actually I need to unhide my... Wait, no, not those. I need to unhide those. There we go. Okay. Actually, I would just take these off, because right now we have our second sig and our third sig down here, which is good enough for me. You could leave the bottom one since we don't have anything down here. Here we have our poor low, which really I'm only interested in the bottom. I don't need to draw the poor low here. I'm just interested in this bottom part, because if we lose this, which is also basically our first sig, we're probably going to come down and tap the second sig here. And then at the top, same thing. And we already talked about this. They just happen to be lining up. You know, if we break above here, which would also be our second sig, third sig, we're probably in a trend day up. So if we break above this, we're expecting price to go higher. Single prints on the bottom would represent aggressive buyers. Single prints on the top would represent aggressive selling, right? So it just depends on where they are. And then for me, this is my chart for SPY for Monday, right? And then as far as trades are concerned, I don't like how congested this area is. Yeah. So the trades I would be interested in is if we already have our test here, right? This is our single print. So if price comes to here, I'm in puts, and my first trim would be there. Second trim you can target here. Third trim you can target there, and I wouldn't be trying to go much lower than that personally. I mean, you can, but it's going to get choppy when price gets to here. As you can see by all of this, like, it's just very choppy. So especially when you're trading options, you're not wanting to be in trades in areas where it's just going to be chopping around sideways, right? We're looking for these nice clean moves up and down. Um, so this is like my preferred setup for tomorrow. If by some chance we get like clean candles below the POC retest, I would be okay with taking puts. But same thing, um, targeting there. You can target lower, but plan on a bounce here. Um, so your risk to reward has to be from here to whatever you're risking, right? Um, I think we are going to go through all of this. I'm pretty bearish for Monday, um, but um, like the setup is to get in puts here, or possibly here, or possibly our previous day value area high. Um, so if price comes up, and retest this, you could go puts. Your first target's going to be the POC. Um, and with any of these, like where you're getting in puts, you can target this being broken, but you're going to want to trim along the way, right? So this would be just absolutely ideal. Um, I don't know that it's going to happen. That's a pretty big move for one day on SPY, 6 points, give or take. Um, but really, um, again, I'm pretty bearish. You can see here, like we came down, so we broke through here, right? So this was like resistance, resistance, turn support, turn resistance again, broke back through, turn support. And so now if price comes down to here, you could look at calls, right? I want to go out on higher time frames and just kind of confirm what I'm thinking as far as, um, yeah. So for anybody that's read volume price analysis, you can see we have a volume imbalance here where price is moving up and volume is moving down, and pretty drastically down. Like, I think this is one of our larger volume candles since like October. Yeah. So here, the last time, oh, sorry, March. The last time we had this much volume was in March. And from there, volume has been decreasing day over day. So, like, we had a big volume spike, this big green candle, but with a lot of selling pressure at the top. We have a big wick at the top. The next day was a very big volume day as well, comparatively looking backwards. But we also have a massive wick at the top on a green day, right? Our red day is also decreasing volume. But if you look at the wicks, the wick is at the top and there's not very much of a wick at the bottom. This next day, decent volume, but again, it's decreasing. Um, and that's a pretty good solid green candle. And then this last day, Friday, we had pretty even wicks at the top and the bottom, but the lowest volume that we've had like all week, and the lowest volume we've had since July 29th, right? To me, this indicates that price is probably reversing and going lower. So now, for like this next volume candle for the next day, I would kind of expect like an increased volume on a red candle, if that makes sense. They might give us one more day of, like a smaller green candle, but I'm really expecting a reversal here, especially with the single prints at the top and second sig and third sig all lining up together. So if we go back to our lower time frame, um, this screams puts if we come up to here, right? Um, this could be our put level here. But if it comes to here, like this is the patient trader that's waiting for that A plus setup. This is that A plus setup right there that we want to take. Everything else is viable, but this would be like the absolute ideal trade to take on the day. Okay. Um, Hopefully this was informative. Hopefully I answered people's questions. Hopefully it's helpful. Um, People in Shorty's Discord, you guys are on the call with me. So if anybody has questions, feel free to speak up. I'll give you guys a second to speak up, but otherwise I'm going to end the video here. And just to show you guys the dedication I have, this is my lunch. My wife brought me like right when I started the video. So, I guess it's basically dinner at this point. Nobody's speaking up. Doesn't look like there's any questions. Anyway, I hope you guys kill it on Monday. Just an FYI, Sunday morning or tomorrow morning, Shorty's going to be doing a class. I forget what he was covering. Let me take a look really quick. I know he's going to be doing a stock scan for long-term positions to buy for a portfolio. So yeah, on Sunday morning, 11:45 a.m. Eastern Standard Time, he's going to be going over a stock scan for anybody that's looking for stocks to add to a long-term portfolio, and he'll cover prices to buy things at. And then he's also going to be covering market profile, which we touched on briefly here, which is like our TPOs, the poor highs, the poor lows. He'll probably go in it much more in depth than I did, or I know he'll go into it much more in depth than I did. There's a lot of things that I didn't cover, like for instance, and frankly, like I didn't cover it because I don't quite understand it yet. And so I'm not going to try to teach something that I don't really understand myself. But like if we look at, I believe it's the M period here. So if we switch this to split by blocks, I know when you have an M period, oh no, this is not it. This is it. So like this M period where we spiked down and made like a new low. When that happens, basically you expect when price goes below that, you're going to get more of a sell-off. But I'll let Shorty explain that stuff. He'll explain it way better than I can. So, and then also there's that, like, if somebody's teaching you and they act like they know everything, they're probably not worth listening to. There's always room for all of us to grow. There's always room for all of us to get better. Never think that you're above anybody else. You know, like my 9-year-old, I tell him, for people that don't know this, I'll just say it like, and when I say this, it's not in a bragging way. But I have a very high functioning 9-year-old child. He has a very high IQ. I believe it's 146, which is considered genius level. He's 9. He does calculus. Like he's way up there. And, you know, like I have to be, as a father, I have to be a mentor to him. And I always tell him, like, never, you know, just because you're intelligent, never think that you're above anybody. And the example that I gave him is me as an adult. I have more knowledge and more wisdom than you. He does have a higher IQ than me, but not by very much. I also have a genius level IQ myself. But, so technically he is more intelligent than me, but, he can learn from me as somebody that has more life experience, that has more knowledge. But also I don't think I'm above learning from him. There's a lot of stuff that he could teach me. I'm horrible at math. I never did calculus. He could teach me calculus, you know, like there's tons of stuff that he could teach me. And in our lifetime together, he already has taught me things. I remember one day,
I'll never forget this because it blew my mind. And this might seem stupid to some people, but again, I'm not all knowing. I have tons of room to grow, whether it be in trading or in life or whatever, being a parent, being a husband, I'm always open to growing and bettering myself and being a better person. But anyway, one day he came to me and he was like, Dad, did you know the moon is moving away from the earth? And I'm like, there's no way, bro. And he's like, no, seriously, like the moon moves away from the earth 1 centimeter per year. And I was like, that's really scary. And I Googled it, and he's right. The moon moves away from the earth 1 centimeter every year. And so there, case in point, my 9-year-old son taught me something. I mean, I'm sure there's other things that he taught me, but that one in specific like really sticks out in my mind because that's such a crazy concept to me that the moon moves away from the earth every year. But anyway, just never, anybody that's trying to teach you something and acts like they're all knowing, I would probably just stop listening to them altogether. When it comes to trading, I'm definitely not all knowing. There's a lot of stuff that I'm working on learning, TPO being one of them. Um, Also, just being more patient. I'm not the greatest at being patient, but I'm pretty good. Um, and something that I struggle with, I always try to be transparent. I talk about not moving your stop loss. Occasionally I do it, and I always kick myself in the ass because every time I do it, like it goes and hits my take profit. And if I was just patient, I would have got the full move instead of the move that I got. A lot of times I am patient and I'll wait and it will go and hit my take profit or go and hit my stop loss. But occasionally I'll move it and I always kick myself. Like, let's just say like I'm in a trade and I had a profit target in mind and it hits an area and it starts chopping sideways. I start getting impatient and I move my stop loss up because I start getting, worried that it's going to reject and go lower. And then, of course, as soon as I move my stop loss, it stops me out really quickly. And then a rocket of a candle comes in and it goes and hits my take profit, like without fail. Every time it's like God, like slapping me on the wrist, like this is why you don't do that. And every time I do it, I kick myself. But again, I don't claim to be perfect. I don't claim to be all knowing. And anybody that is teaching you stuff that's acting like they are, I would stop listening to them. Anybody that tells you, oh, like this works 100% of the time, I would stop listening to them. There's no such thing as 100% in trading. Okay. Anyway, tune in Sunday morning. Should be an amazing class. Hopefully this was educational and helpful. Hopefully the trades we covered for Monday absolutely slap and you guys make some money. Overall, it looked to me like when I was looking over tickers, like a lot of stuff is going to be getting a move to the downside. But, things could change with news or whatever else. But generally, I'm bullish on Monday. But yeah, tune into Shorty's class, learn about market profile and TPO and all that stuff, and also positions for long-term